How does a stock make you money? You feel me? A lot of people might be aware that the stock market is a place where people can definitely make a lot of money and things like that. But this segment will really break down how specifically that happens and how a stock can make a person money. All right, so off rip, right? I'm gonna say everything that I mentioned, all right, is my own personal definition. All right, this obviously isn't financial advice, but it's strictly for educational and informational purposes only. All right, so basically, when you buy a company, right, at a certain price per share, all right, and I'll define what a share is in a minute. But when you buy a company, right, at a certain price per share, and that price per share increases, okay, so does the value of your original investment increase. All right. So let's say, right, for a definition of a share is basically like a unit of ownership within a company, right? So if the price of a company, right, per share was $10, okay, for one share, and you had $50, ultimately that would mean what? You could buy a maximum of 5 shares based off, the traditional, investing route, if you will. If it was $10 per share, you had $50, okay, you could then buy 5 shares, all right? And quick example, all right? Let's say company A was $10 per share, right? And you bought one share of that company for $10, right? The next day or the next week goes by, and now a price per share is $12. That would ultimately mean, right, that you would be up $2. Now notice, I'm saying up $2, not necessarily that you made $2, all right? Now obviously, again, the title of this is how does a stock make you money? But in this example, okay, if you purchase at $10, waited, and now the price per share, okay, is $12, you would then be up $2. Now, you don't actually make money until you sell, right? So like if someone is up 100% on an investment, or they're up, let's say $20 or whatever the case may be on an investment, that's obviously a benefit, okay? But until you sell, that's when your actual profit, okay, should take place. And this is really important when it comes to emotions in the stock market, whether you're down 50% or up 50% or whatever the case may be. It's not an actual profit for you, I guess, or a loss until you actually sell, okay? Because there's times where people will be up huge on an investment and don't sell, right? And then lose out on all their potential profit, okay? So just really, really remember that, right? Obviously, emotions come into play when you're investing. There's always risk and all of that, okay? But your money is actually made when you sell. And it's always a you decision, don't get me wrong. But be thankful for profits, and everything like that. But understand that, your money is made when you sell. Now, stocks can move in 3 ways, right? They can go up, right? They can increase. They can go down, right? They decrease. And those are obviously the 2 common ones that nearly everyone talks about. But the third way, to me, is they can move side to side, right? Not do anything, okay? But the thing is, you just have to be prepared for whatever happens next. If you're down on an investment, if you're up on investment, if it's not doing anything, all right, but understanding that when you make your original investment, it can move 3 ways. So just being prepared for that. Now, obviously, when you buy shares of the company, right, you want it to go up, right? You want it to increase in value, of course, right? That's ultimately how it makes you money, again, until you sell. But ultimately, just, again, having that understanding that they can move 3 ways. Once you buy and sell a stock, right, the value is still yours. Right, I think one of the biggest myths that I've heard about the stock market is like, well, where does the money go, right? So let's say, if you bought a stock for $10, right, and it goes down to $8, okay, like that's still your $8. Like you can decide, right, if you want to sell it at $8. It's not like, all right, you can't sell until it's up in the green. And on the flip side, right, if you bought in at $10 and it's now up to 15, right, if you decide to sell it at 15, or if it's at 15, you can still sell it and then it would be yours. The value is still yours. The money doesn't necessarily go anywhere because it's changed in value. And so another common question I hear is, well, what if I lose all my money, right? And this is why I say there's a difference between gambling and stocks. Now, obviously, I'm not going to promote gambling here, but just the idea of like if you went to a casino, right, and let's say you bet $50 on a certain game, and you lost that $50, that $50 is now gone. Right, you can't see that again. There's no refund. There's no decision afterwards that said, maybe I want my money back. That's what gambling kind of is. All right, but on the flip side, with investing in the stock market, if you invest that same $50, right, and it went down a little bit, right, let's say it went down to $45 or $40, you can still decide, like, all right, you know what, I'm going to cut my loss here. Even though I might be down, right, and sold for a loss, you would still be able to get back your $40 or $45, okay? And when you think about investing, again, the decision making as well as the possible long-term play, it'll always be there, but again, gambling obviously is a different ball game, but just understanding the difference and that losing all of your money in the stock market is very, 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 very actually challenging thing to do. And just for perspective, like if a stock were to go to zero or like the stock market would like tank and go to zero, whatever, like the world would be in a lot worse place than just the stock market crashing. Just to kind of make sure everyone understands that, like, it is very, very, like I said, difficult to lose every penny of every dollar that one invests in the stock market. All right. Again, just in terms of buying regular shares. Okay. And so obviously, like a rule of thumb, I feel like, for people that's new to the market is, don't invest money that you need. Right. I don't suggest, using your rent money to, get started investing in the stock market because obviously there's risk involved. And lastly, just to touch on this briefly, another way that a stock can make you money is dividends. And basically what dividends are, again, just in my personal definition, is when a company pays you for having shares in them, right? So sometimes, now another thing to remember is not all companies offer dividends, okay? Now some people consider this obviously, a form of passive income. You don't really have to do much to receive dividends. Now obviously, the more shares, the more you have invested, the higher your dividend payout will be. But just the idea of like this is, in some instances, a guaranteed way of receiving money through investing in a company, how a stock, again, overall can make you money. It doesn't even necessarily have to just be trading or investing. There's companies out there that will pay you, right, for having shares in said company. And just to recap how a stock can make you money, again, just through buying traditional shares. If you buy, shares of a company, okay, at a certain price, and that price per share increases / is higher than what you really bought it for, and then you decide to sell, okay, bam, that's how, you'd have made your money. But this is very, very important, all right, for people to understand that when it comes to making money from a stock, you don't make anything or you haven't made anything until you sell. There are plenty of examples where people have been up, 10%, 20%, 100%, 200, whatever, okay, and then technically make anything, okay, because they did not decide to sell. So there you have it. That's how a stock can make you money. Peace.